Up only.
Okay, up only. So I think that means that we're going to the moon. I'm not a financial advisor. All right, so what I want to talk about is I want to talk about the target rate probabilities for the Fed meeting. And we were having a conversation, a very interesting conversation. Welcome, Cassie, to the show, obviously, and AJ as well. The point is, these numbers a little bit ago, it was 17% and 83%. And if you remember us looking, and so on the left side, you're seeing the odds of a 50-point rate cut, a higher rate cut. And then on the right, you're looking at the odds of a 25 BIP, a 0.25% rate cut, okay? It's called 25 bips. It means basically 0.25%. So the point is, yesterday, these odds were as high as 33, 34% last week. Yesterday, the odds were 31%. This morning, we got the CPI data, and the CPI data checked out. There wasn't anything really horrible about the CPI data. It came in actually exactly as expected. I want to say the core came back exactly as expected as well. So we were told that if it came back higher than expected, the inflation was higher, then there would be a better chance for a rate cut. If it came in lower, there would be a higher chance for a 25 BIP rate cut, okay? It came in exactly as predicted. You see how they play this game? Came in exactly as predicted, so we can't predict what they're gonna do. However, we see on the screen there that we have dropped from yesterday over 50% now. And so the idea is we were looking at a potential crash on the TA, okay? We were looking at a crash for Bitcoin potentially. And a lot of people have been talking about it. CryptoFace was talking about it. I think it was AJ or Jay James. One of you guys was mentioning it earlier today, potentially. And the thing is that if we were expecting a high chance, like a 33% or even a 25% chance of a 50 BIP rate cut, and we didn't get it, and we got a 25, it would be negative, and that would be what we would probably expect for a crash. However, since what we actually saw here is exactly as expected, now the odds have still shifted so heavily towards a 25 BIP rate cut, that now, as of today, as of the release of the CPI, which is supposed to be the official big thing that was going to determine what the rate cut was going to be, we now can expect a 25 BIP rate cut. And that gives them the ability to do two things. Number one, it gives the government the ability to surprise us and do a 50 BIP rate cut, and they were in early, or people in the government went early, and the price would skyrocket, and that would be great for a lot of people, right? People aren't shorting. Or the other thing it could potentially mean, the most likely scenario here is that now we're expecting a 25 BIP rate cut completely, utterly and completely, unless something drastically changes in the next few days, which would send the whole market up probably. Mm-hmm. We're now going to get a 25, which means when the 25 cut comes next week, we have now negated the idea that people will panic somewhat because it's 25 instead of 50, which would be a good catalyst to send the market down. So these are my overall thoughts on this. I want to start with Cassie, get Cassie's thoughts on this, if you have thoughts on it, because I know AJ is probably going to go into charts and maybe go a little bit longer.
I really don't have any thoughts on it.
Thank you, Cassie. I love you. Well, you can
up only. I mean, everything that you've explained. So I don't really follow, as you know, I don't follow the rate cuts.
Yeah.
Like Ben is the master at following all the political junk, but up only. So
yeah. Okay, up only. So I think that means that we're going to the moon. So okay, AJ, what are your thoughts? You want to take it away, sir.
Yeah, I mean, you basically covered all the bases we talked about this morning. So essentially, to put it very simple, if say this chart that was on the screen here was saying that we were expecting a 50, but then we got a 25. First of all, getting a pivot at all, like the first interest slash in forever, good thing. But if we're expecting a 50 and we get a 25, we could still dump because it was less than expected. Mm-hmm. But now, since the 25 is expected, there's not going to be like a bad reaction to the 25, and it kind of puts the cards into their hands, like Ben said, because if we get a 50, it could, actually there could be some sort of bullish explosion in that event. So really, the 25 can't be a bad thing. And if it comes in as expected, it comes in as expected. So there's really not a worst case scenario here, because they're definitely not pausing next week. Like, we're getting a slash finally. And like I said on the channel the other day, a lot of people put a lot of stock into this specific slash, a 25, a 50, but really the slash is not at all baked into anything, especially if you've been following the stock market, that. It's really going to be the accumulation of slash after slash after slash. I mean, we have 5, 6, 7 in a row. That's really when we're going to start to see the chart for the dollar really start to lose support resistance. If you look at the DXY chart now, you'd realize that, okay, this thing's still, holding massive support resistance, and, a weak dollar is a strong market, and vice versa. So really the measuring stick for baked in to me has everything to do with the dollar chart, and that thing's still holding strong. So that's kind of what I have my eye on, watching the dollar, watching the S&P, and watching, right now, Bitcoin dominance and the total chart for total 3 chart as well. So a lot going on there. But yeah, much love to everybody in the chat. Appreciate all the support. You guys are awesome. Man, dude, let's just get it over with. I want it to be next week already.